Hi, this is James Shug at Westpac with the end of market day report for Thursday, April the 26th. A bit of a positive day on equity markets in the US today. Europe was more mixed. We had a range of stories driving sentiment. In Europe, some decent earnings reports from the automakers. Volkswagen, for example, today. We had Peugeot, Citroën yesterday. Helped push things along in some of the continental markets. However, there was an overarching sense of concern about the business surveys that were put out by the European Commission. The Business Climate Index fell from -0.3 to -0.5 in April. That's its weakest reading since the end of the recession in 2009. And the European Confidence Indicator, another survey, posted a similar decline. So two pieces of information further confirming that the European recovery, which began a few years ago, has really run out of steam. I mean, just think about it. I think I went through it yesterday, but we've got Spain in recession, Italy in recession, Portugal, Greece and the Netherlands, all confirmed in recession at the moment. And next month, in May, we get the figures for the first quarter, which we suspect will show that the broader Euroland region is also in recession. And that's certainly the message from the surveys that we saw today. In the US, the data was mixed. Home sales, this is pending home sales, that is, sales have been agreed but not yet finalised, they rose 4% in March. Interesting number, that, because almost every indicator of the housing market that we've seen, whether you're looking at starts, new home sales, home builder sentiment, in the last few weeks those indicators have all turned downwards. This is the one indicator of housing that hasn't, and in fact one of the few indicators on the US economy that hasn't turned softer of late. When you think about it, we've got jobs, industrial production, auto sales, business confidence and so on, all of which have suggested the US economy's lost momentum since about the middle of the first quarter. Now, statistics never always point in the same direction. Retail sales for March, a week or two ago, they were quite upbeat as well, although we get revisions on Monday which could alter that retail story. But nevertheless, the market did like the home sales numbers, and that's one of the reasons why the US market did quite well today. Other data on the US was less strong. We had another initial jobless claims figure for the latest week. It was down just 1,000 at 388,000 in the latest. So that's 3 weeks running now that claims measure, which tells you how many people are being laid off basically. That's 3 weeks now that's been running above its low point back in March. So that's another indication that the jobs market in the US might be coming off the boil a bit. Not going backwards, but it won't be posting as strong as outcomes as we saw December, January, February. Recall the March jobs report for the US was a bit softer. Another survey, a couple of surveys actually, Chicago Fed and the Kansas City Fed, they were both weaker. And in the UK we had a weaker retail survey from the CBI, although consumer confidence on one of the indicators there was reported higher in March. So that's about it in terms of the data flow. On the markets today, we've got the London market up 0.5%, the French market down 0.1%, the Germans up 0.5%, the Spaniards down 1.3%, and the Italians down 0.2% today. And the Dow, it's currently 8:45 in London, so what's that? Less than an hour of trading to go. We're looking at 13,213. That's a gain of 0.94%. Commodity markets mostly positive today. We've got oil prices up 0.4% at $104.58 a barrel. Gold's up 1%, $1,658 an ounce, and copper's up more than 2% today. Aussie dollars benefited from that and the positive sentiment on US markets. It's at 1.0395 at the moment, up about 0.5% from when I reported yesterday. All right, that's it for today. I'll be back again same time tomorrow.